Intel, Yahoo, Bank of America. Earnings Palooza rolls on. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Rough day on Wall Street due to a sell-off in tech stocks and the price of oil dropping below $88 a barrel. Most of the Dow stocks were down today, with Bank of America doing the most damage. A little bit more on Bank of America later in the show. Joining me in studio, Jason Moser and Charlie Travers. For the first time since late 2011, Apple traded below $400 a share. One of Apple's key suppliers, chipmaker Cirrus Logic, warned that fourth quarter results will be much weaker than originally thought. More than 60% of the company's revenue comes from Apple. You've got analysts out there saying this is yet another indication of lower demand for Apple's products. Is that a legitimate fear?
I think the dots may connect. I mean, we look at the share price today, and it's tough to believe that reflects about 36% of that share price is cash and equivalents on the balance sheet, which really just tells us that the market has no real faith in this company's earnings power going forward, which is phenomenal to believe. But the fact of the matter is that we've hit this point in the refreshment cycle with the phones that we don't really know that they're going to be able to come up with anything much better than the iPhone 5 at this point. So then it goes to iPads. How much farther do they have to run? And we hear, of course, all of this talk about a new potential watch product. So I think there is a lot of skepticism out there as to what they'll be able to develop next. I think it's reasonable.
And yet, when you look at the stock dropping more than 40% in just over 6 months, is that an overreaction to you?
I think so. It's kind of funny how everyone was falling all over Apple when it was $700 a share. Now that's $400. Everyone's like, no, I don't want to touch it. The reality is Apple's a phenomenal business, trading at just 9 times earnings. And Jason mentioned the iPads. They sold about 50 million of them last year. I think they could sell multiples of that annually going forward. I think it's a great buy here.
They're going to report next Tuesday. What are you going to be watching that could get you interested in the stock?
I'm interested in the stock now. Why I think the market's reaction is reasonable. I think it's somewhat short-sighted. So let me get that out of the way first. When I look at the call next week, really I think one thing to pay attention to is China. Understanding a little bit more about the market share that they're picking up there. We know that China Mobile is going to come under the iPhone's wing here soon, but we've seen at least one survey out there that says that Samsung is picking up a lot of market share on Apple, and that could be attributed maybe to a little bit of recency bias. But again, understanding how they're going to be picking up a little bit of share in China, I think will give us a better idea of really the global market share that they'll be able to gain.
All right, let's get to some of the day's movers and shakers. Analysts were expecting Intel's first quarter profit of $2 billion, but that's a 25% drop from last year's first quarter profit. They're not lowering guidance, though, Charlie, and yet some people are wondering if Intel has missed the boat on mobile.
They're a little late to the game on mobile. All the ARM design chips have really taken the share there, but Intel is the largest processor maker in the world. I think, they talked about the new Haswell processor coming out for them later this year that's going to have much better performance and battery life. They're going to bring the Ultrabooks and tablets, both for Windows 8 and Android operating systems, down considerably in price. I think that'll help them take a lot of market share.
Bank of America down after first quarter earnings were higher than a year ago, but still much lower than Wall Street was looking for. When you look at the fact that shares over the last year have beaten the market handily, what does that say to you? Were just expectations so low that they couldn't help but go up?
I think that's part of it. We also have to remember that financials were the best performing sector of 2012. So I think there was a little bit of a bounce back there. Now, with that said, I think that Bank of America is still a dog, and I wouldn't touch it with a 10-foot pole. You look at the top line revenue of this company, it's down about 35% over the past 5 years. Share count has more than doubled. And again, I think you have management that's still trying to figure out how to keep their head above water. There are way better opportunities out there, and I'd stay away.
Yahoo's first quarter results were kind of a mixed bag, but revenue from display advertising dropped 11%. We've seen a really great turnaround from last summer when Marissa Mayer took over, and yet this seems like one of those numbers, Charlie, that next quarter, if they come with this kind of drop again, people are really going to start to wonder.
Yes, they are, Chris. And it's not time to panic yet. I think some of this was self-inflicted to improve the user experience and the user engagement on some of their premium properties like Yahoo Sports and their homepage. So I think that is a good decision on their part. So we'll give them a few more quarters, see if they can pick it up.
And finally, shares of Mattel hitting an all-time high after first quarter profits came in more than 4 times higher than a year ago. Strong sales of dolls like American Girl and Monster High getting the credit. Sales of Barbie down 2%, but fortunately they have an army of dolls over there at Mattel.
Barbie's not pulling her weight, is she?
Not anymore.
No, but I tell you, this is actually just an extended holiday season for Mattel, and really one of the bright spots on the market today. Just a phenomenal quarter when you think about the first quarter for these toy makers is typically a very weak one. They kind of reset and get ready for the new holiday season at the end of the year. I'm still amazed that they were able to grow their gross margin line over 300 basis points, and so for me that says they didn't have to really cut prices a lot. They've done a really good job of keeping production costs in check, and the stock has just killed the market over the last 5 years. I still think it's a winner from here.
And we both have daughters. We know about the Monster High, so you're welcome, Mattel shareholders.
Keeping these guys in business on a daily basis.
All right, that is going to do it for Tuesday. Let's look ahead to the rest of the week. Charlie, what's the stock you have on your radar?
I'm looking at Google, Chris. This might be the only large cap tech stock that isn't struggling in one way or another. Google's just firing on all cylinders, and their core search business and the advertising has remained very strong. But I'm really interested in some of the new initiatives they're rolling out, whether it's Google Glass or the fiber optic cable.
All right, Jason, what about you?
I'm getting hungry just thinking about it. Chipotle's earnings after market closes tomorrow. There's a company that I follow over Motley Fool One, and I own shares personally. I tell you, it was not too terribly long ago when Einhorn's famous short thesis came out,
Sure.
Taco Bellgate, I guess we could call it. I don't think that really had too much of an effect. The stock has certainly bounced back from that. But it's worth paying attention to comps, of course, same-store sales, because they projected flat to low single digits for the year. But it's also going to be worth paying attention to management's take on food cost inflation. And while they're not passing through any price increases yet, they did note last quarter that that possibility still remains. So I'll be looking out for that. But again, I think it's a great long-term buy. It's their 20th anniversary this year, and I can't wait to see what they look like in year 40.
Okay, for Jason Moser and Charlie Travers, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.